I'm doing well, Greg. Thanks for having me. It's always a good time to talk to you. Yeah, so I mean, it's kind of interesting because what we saw with FTX going bust and kind of the shady stuff going on, it very similar to Lehman Brothers in 2008. The similarities, you could say, well, FTX isn't really a bank, but in the crypto world, it kind of acts as the bank, right? The broker, the bank, which is exactly what Lehman was back in '08. So you look at that as kind of the big earthquake in the bear market. And in 2008, Lehman Brothers was kind of the thing that everyone remembers from that period. The markets, however, a lot of people think the markets were bottoming just as that was happening. That was the final thing. But really, if you look at the chart showed us that it took about 5 to 6 months following Lehman Brothers for actually the market to bottom, the S&P 500 to bottom. So if you compare those, what it does is it gives us a little bit of a general guidance on when we could see that final washout in the markets of the crypto world. So I do think this is the beginning of the final leg down in Bitcoin. I don't think we're there yet. What we saw with Lehman is that when Lehman occurred, the S&P dropped about 45% more. So if you look at Bitcoin, that tells us that we could drop basically to 9,000, give or take. I mean, between 9 and 10 or right around 9,000 would be that same 45% drop. So again, it's kind of eerie, the similarities. But one thing we know about trading is that humans tend to have the same emotions. The greed, the fear replicates, which means these events technically will replicate over and over again. You could go back to the tulip mania in the 1500s. You could go to the dot-com bubble. You could go to the real estate bubble in '07. It just continues to repeat, and we see it here in the crypto world again. So here's your Bitcoin chart, right? And one of the things that's interesting is that, if we look to the charts, there's actually a trend line that if you connect the pre 2017 bull market lows right here to the lows of the 2018 and 19 bear market, right? So you have these two lines connect. It connects right through the COVID low, and it basically gives us a current price of around 88,000 and change. And what we know is this is an upsloping trend line. So probably within 4, 5, 6 months, this is at $85,000 to $9,000. And again, it makes a lot of sense that you need Bitcoin to return to its longer term trend before it can find major support. So that gives that kind of confluence of technicals along with the Lehman Brothers kind of comparison with FTX. And just keep in mind, Lehman Brothers was the big thing, but there were other smaller banks that went bust after Lehman. That's the headline one. So what that tells us is that you're still going to have this chain reaction. We've heard about Genesis recently and other exchanges and so forth that are kind of going under or having trouble. But really, FTX to me is probably the biggest one we will see. Now, the interesting thing, and a lot of people have brought this up, they say, well, the Fed started printing money in '09, which is when the S&P bottomed. But in this case, it's very unlikely that in 5 to 6 months, the Fed will start printing money. Now, I don't think they'll be raising rates anymore. I just don't think they're going to be cutting them or printing money. So then the question is, well, what's the catalyst that coordinates with the printing of money from the Fed in '09 that would be that Bitcoin low? And the answer is very simple here. It would be essentially that transparency, that regulation that we all know is coming now, right? You got a lot of big companies burned because of this FTX scenario. You got a lot of small investor is burned. There's a lot of pressure on the politicians, the SEC, to create that regulatory framework. And the reason why that's so important is because when you have clarity, when you have transparency in the crypto markets, that's going to draw big money back in. Big money after FTX is not coming back to crypto until they have that insight into what's on the books, the leverage these companies are taking, and everything like that. So really interesting. And by the way, after the financial crisis, there was legislation passed to make it so that the banks couldn't be bad actors again. It was called Dodd-Frank. So you also see that kind of maneuvering here with the regulation that's probably coming for crypto. Do that here. I want to do a parallel and let's just see, because I bet it's pretty darn close to a parallel if we do that. I mean, again, you could see it pierce up there, absolutely. But yeah, I mean, right in that, either a megaphone or you could make a case that there's a parallel in there that makes a sense for that as well. People laugh at the 500,000 price target or so on Bitcoin, but I mean, it would not be a stretch if you had that type of money coming in. Absolutely.
Yeah,
that's right. That's right. And I think what people have to realize too is that, people always look at this, this kind of idealistic view of what crypto should be with no regulation, self kind of imposed. But we have to remember that there's no, you don't have this idealistic human nature, right? We have people that are bad actors that are doing shady things. And so you got to choose which one's the one you're going to go with. Are you going to go with no regulation where people potentially, your money vanishes on an exchange, the next morning? Or do you go with, the potential for some regulation and then maybe a little over regulation, which is always a chance with politicians, but which one's the worst scenario, right? I'd personally rather a little bit more regulation versus my money on an exchange vanishing tomorrow. So again, I haven't isolated down to the specific date, but I think what we can do is we can go back to the S&P from 2008, right? And 2008, what we saw is on September 15th, I believe it was right here. This is when Lehman Brothers collapsed, this candle right here. And so that was on September 15th, and the markets bottomed out on March 9th, right? So, or March 6th, excuse me. So basically what that does is it tells us September to October, October, November, November, December, December to January, January to February to March. So basically you're talking about 6 to 6 months, give or take a little bit. And again, as we get closer, I think I'll isolate that price point down a little bit more. But I think right now you're kind of in that 6-month-ish range of when we should bottom out from the FTX collapse. So again, the way I like to put it is this is the beginning of the final push down, right? I think that there's going to be more forced selling. I mean, I remember even before FTX, I remember hearing that the government had basically from Mt. Gox had accumulated 150,000 Bitcoin. They might sell those. You have other scenarios where these forced bankruptcies, they're going to have coins on their sheets that they're going to have to sell to try to pay back investors and raise capital. So there's going to be kind of this chain reaction, much like there was in the financial crisis. But it's the beginning of the end. Once you get that sorted out, I think that's where you bottom out. Then bring in the regulation, which I think will come. We'll see a framework, I bet, within 3 months, and then something very firm within 6 months. And I think that coordinates to put in a bottom on crypto. It was December 16th. December 16th. So basically a month, right, into the new kind of this new wave of buying in that March period. Correct. Yeah.
Okay.
Interesting. So what I'm thinking is though, is that I think you're going to see this flip of Bitcoin becoming a safety asset in that period, right? So I actually think the stock market could actually continue lower and be in this protracted, this long-term bear market, mainly because I believe that the Fed isn't going to be able to lower rates or print more money because of inflation staying higher than 2%, right? So you're going to get in this bear market, this recession, and there's no way for us to get out. I mean, I don't even know if the economy knows anymore how to get out of recessions without the Fed's help. And so the question that I would have is then, do you see that March low as being the point where Bitcoin flips into a place to hide versus a risk asset, which it is right now? And that's what I kind of think could happen. I agree with you on that. I think that makes a lot of sense. So it's going to be fun. I mean, I always tell people like when they hear 9,000, they're like, oh no, 9,000. But I mean, at least we're close to the end, right? I mean, if you look at, from 69,000 to 16,000, how much of a drop that is. And then all you're saying now is from 16 to 9. It's not that, I mean, percentage wise, it's a lot from here, but in the scheme of where we've been, it's not that much. I agree, man. I think that makes a whole lot of sense. And I'm excited because again, it's just more opportunity for us as investors and any clarity I can get. And listen, there's always a chance that I'm going to be wrong and maybe it's totally not. Maybe it goes to 3,000. Maybe it only goes to 12. I mean, but the point is that as a trader, you do your best to predict and you find the higher probability setups and then you go with it. And the idea being is that you're right more than you're wrong. So true, man. And it's not going to be that long until we find out too, I think. I think we'll know, basically the way I look at it is Bitcoin probably starts to break down in the next week or two. I mean, it's still going to take some time to finally bottom out, but if all of a sudden we pop back above 30,000, then that puts a dent in the thesis. And so I think you have a kind of a good basis to kind of know if it's still in play. Yeah, absolutely, Greg. Yeah, pleasure to talk to you. And I always love chatting with you and talking charts. That's for sure. Take care, buddy.
Bye.